All right, so this is a sort of unique FinTech Flow where we are remote, but we're also in the same city practically.
Yep. Throwback. This is a real 2020 episode. So I got COVID over the weekend. I'm back in quarantine, which being in quarantine when the rest of the world isn't anymore is really annoying. But such is life. Here I am from the shed in the backyard. But I'm excited to get to talk to you today, Drew.
Yeah, there was some I feel like mutual bonding over everybody being quarantined together. I remember playing darts with friends who they were in their own houses and they would throw the darts and they'd let us know what they got on their score, and then we're on my house in the basement and doing that. So yeah, no, good to have you back. Good to see your face. Good to see you in good spirits and feeling well.
Yeah, all healthy. One day thing. Kicked it quickly though, and I'm back to work. Just bummed I have to dial in for all this stuff. I'm going to be hanging out with you and the rest of the team.
So I did want to open with Roger Goodell, actually, who has also been extended. He's back to work and a 3-year extension with the NFL. The owners voted, and as much as the fans oftentimes are not big fans of Roger Goodell, the owners seem to really be in support of Roger Goodell.
How much they give him?
So I want you to, well, you could take a guess, but his first salary was $6.5 million. And now I don't know where that stacks up amongst, it was about 20 years ago that was his first starting salary.
Well, okay, so that's a lot of money. That's good. Good for Goodell. Okay.
Right, but that was his first salary. Now, obviously, with inflation, with more experience, usually you go through this ranks as a CEO. You eventually start to make more money as you've got more experience. So you want to take a guess at what his most recent contract was for 1 year?
I don't know. Maybe he doubled it. Maybe call it 13 million. Let's get wild.
Sure. Yeah, that's around the average of what most of the major sports CEOs and chairmen and presidents are earning. Okay. His was 64 million.
What?
64 million, and it was 90% of it was tied to successful media and labor negotiations as a bonus, but still. Okay. Most CEOs get a majority of their compensation in equity. In this case, there's no really equity. Nobody's buying shares of the NFL, right?
Yeah, I think now, all that said, I believe the NFL is considered a nonprofit organization. Mm-hmm. So I wonder if there's something to be done with that entity.
Wait, is the NFL actually considered a not-for-profit?
I'm pretty sure that's true. I'm sure we can get fact-checked here. Yeah, we should look that up. But yeah, I think they somehow got away with that. It's wild.
Yeah, I mean, so the other interesting thing I find about this is is this sort of like a conflict of interest? Like, who's deciding the package? Like, you're the CEO of the entity, so you're kind of like the chair here, and you have to be involved, obviously, in leadership equity packages. Do you get to pick your own compensation package because you're the leader of the company that's also paying the leader of the company?
So in a corporate setting, there's you have the board of directors, and then within the board of directors, there's a compensation committee, and that compensation committee determines your compensation. They negotiate with the founder in reality, but it's based on public comps. They look at what other CEOs are making in that world. They kind of come up with bonus structures, apply those targets to your business, and go from there. So it's there are some checks and balances around what that is, but it's CEO has a lot to say in their relationships.
So I think this is going to be a big thing moving into the new year. And then a lot of what's on this episode is this ongoing workforce discussion. Some of that has to do with going back to work. Some of it has to do with the salaries as we deal with inflation, coming back to the office. Executive compensation packages are always one of those things that every couple of years gets resurfaced. And is it warranted? There's a lot of meme content going on online right now that I've been seeing where it's people making fun of, oh, well, sorry, we couldn't we had to lay off all these individuals, but I was able to get this bonus as an executive as part of my package, right? And then there's always that battle that goes back and forth. And, obviously I'm talking to an executive in and of himself, but, so you can't be shooting yourself in the foot here. But there is one of those things where it's like, how much is warranted? And are some of these packages that some of these people at these major companies, is it over the top? And the reason I'm a full supporter that when you make your way to the top, when you found something, you need to get rewarded for doing that, because you're putting your neck on the line. You're risking, a lot. But is there a certain point where, sure, if I happen to be the CEO of a company that brings in $10 million a year and I help double it to 20 million, then maybe I have some equity tied to that versus someone who does from 100 to 200. They're just a bigger pool, but you really made the same decisions. It's just there was a bigger pool to work with. And so how much of it is justified, and should there be some sort of limitation or standardization?
Yeah, and I will say, I'm a CEO, so it's a bit of an awkward discussion to have, but I also think I have some interesting perspective. When I started the company, I was the senior accountant looking through all the 10Qs and trying to find the proxy statements with compensation packages and being like, oh my gosh, that's what CEOs make, blah, blah, blah. I've learned there's a big spectrum about how much CEOs make across different companies and different sizes. And I have a little bit of a different stance on it as well. I think that, if you're it's kind of odd to me that CEOs of the biggest companies that are the most established and kind of are just going to keep trudging along, they make the most, whereas you see a lot of founders oftentimes aren't making the most on an annual basis, and they had to work really hard and take on a lot of risk to earn all that money. So there are ones where, like an Elon, he might have a massive comp package, but the way he negotiated his is it makes a ton of sense and he's getting paid and everyone's happy. You look at someone running an old school business who's just keeping the train on the tracks. I don't know if they're worth, $50 million a year, like what you see with some of these companies paying out with all that. So there's a spectrum. I'll try to be as unbiased as possible through those conversations, but just know I don't make nearly as much as Roger Goodell. I wish I did. I do not. FloQast doesn't have the cash flow to support that. Nor do we have the board that would ever.
And that's what it's good. It's all about checks and balances, and that's what Roger Goodell did. Is he was able to get the board, which is essentially all the owners of these different football clubs, on board and get them to agree to his package. And now, granted, he has done amazing things for the NFL as far as they talk about how much I think the revenue of the NFL has over doubled over the course of his tenure. So there is actual hard numbers tied to it. The big question always comes down to, how much is that one individual solely being responsible for that impact, right? And obviously, I'd have to go through the whole executive team at the NFL and see how much everybody's making. And, if they're all in the same range, and it's okay, they're all contributing equally and he's just the face of it. But if there is a big discrepancy, it's how much can one person truly solely impact beyond just being the visionary, but you're essentially just a decision maker that gets paid a lot to either take the blame if things go bad or, get the fruits of your labor if you're able to secure the loot.
Well, I will say, so a little bit of a counterpoint to that is there are the other people doing the work, the VPs. Mm-hmm. They were hired by the CEO. They're managed by the CEO. They're inspired and aligned by the CEO. And so at the end of the day, it still is the CEO's doing for bringing in the right people and being able to retain them. If he brought in a bunch of crummy people below him, he's probably not getting the comp package that he's getting today. And that's a big part of your job, is hiring and bringing great people on, and they execute on your behalf. You can't do everything as a CEO, right?
Yeah, I think that's one of the biggest leadership tactics 101 is just hiring the right people. It's you move on from just being a runner of a business to you're a runner of people. You're in the people business when you get to that point.
You've really made it if you as the CEO are hanging out with your executives and you're the least impressive person in the room. That means you've hired a bunch of great people who are doing really great stuff for you and your company.
Yeah, which deserves to be respected. So, all right. Well, with that exciting compensation talk to get us going, because everybody loves talking compensation, so it's a great way to kick things off, get everybody excited, exhilarated about the episode. This is episode 18 of the FinTech Flo. So let's get flowing. FinTech Flo. All right, everybody, and welcome to episode 18 of the FinTech Flo. I am Drew Carrick, the rapping CPA.
I'm Mike Whitmire, co-founder, CEO of FloQast, inactive CPA with a new microphone setup post introduction.
Yeah, we love switching that around. I mean, I did the same thing to Stefan when I sent him over his mic and got him, feeling all uncomfortable and interested by having his own super red knobbed microphone. So
nice.
had to even the playing field.
Well, glad you hooked him up.
Yeah. So I'm looking forward to catching everybody up to date here. There's a few pieces of news that have been going around, specifically in the accounting industry, has been buzzing in every publication. But let's start off with some general stuff going on. We have the U.S. recession seems less likely. And now this is one of those opinion pieces, right? Because there's nothing factual about whether a recession will or won't happen. And I think you have some potential different takes on whether a recession seems likely or not. But for over a year, a quarterly survey of economists by the Wall Street Journal had indicated that the U.S. economy was headed for a recession, but that's now down to 48%. So it's still a 50% chance. But reasons for optimism include cooling inflation, steady interest rates, a strong labor market, and resilient economic growth. One of the things that I just picked up on recently over the last week is finding out that the actual number of households that have stock in general has gone up over the last 2 years. So more people are getting into investing, which I think is kind of interesting. And I think this is really the post GameStop situation era, where it just got a lot of publicity around the stock market in general, and people had extra money from COVID relief and just from not going out. And so they had this money sort of stockpiled, and they said, what are we going to do with it? Then decided, I'm going to invest in the stock market. Now everybody wants to get in. Now, most of it on average is below $20,000 that people are putting in. So it's not make or break your life type of money, but people are now interested at least in the stock market. So it's not a heck of a lot, but it's still a lot of people and more households are involved in the stock market. And we think some of that perhaps is where there's some optimism of just there's money still being pumped into the economy or through the stock market, which is sort of negating some of the more recession-driven factors.
That's encouraging, yeah. And a good thing has been bought over the last 2 years. That's when the market's been low, right? So well done, everybody, buying low and hopefully holding, and then, I don't know, selling ultimately at some high price. But that's encouraging to hear. Yeah, that's like the definition of people have some disposable income, so they're going to invest it. I guess, I don't know, maybe I'm too much of a doomsdayer, but I'm still concerned. I don't know if I really believe that inflation's cooling, particularly in the sectors that matter to people who inflation impacts the most. The whole labor market is really fascinating, just the calculations around that. And I can't get a real good sense of what's going on in the broader labor market. Then I just look at, the one I keep looking at is consumer debt. And it's like, that's the one where you see consumer debt continue to pile up. And we have an economy that's driven by consumer spending. And so at some point when interest rates catch up with the amount of debt available to a consumer and that spend starts to go down, that's the cycle that I would be on the lookout for. And I don't see what signs are pointing to that not happening.
Yeah, I mean, when you think about the global atmosphere as well, whenever you've got these sort of wartime environments, it always adds an extra layer of concern, especially in the U.S. particularly, where we're just spending in every direction. The debt is piling up the nation as a whole. It seems like, and this has also been in a lot of news sources recently, is just we've always known like we're probably never going to get back to paying all of the debt that we owe, and the national debt is just one of those things that keeps on moving, but it's just getting exponentially worse, which I don't know if people predicted that or not, but it's one of those things that is a growing concern, if you will. And
dude, there seems to be like war and conflict all over the world, and historically that's been a really good driver for the economy. It creates a bunch of jobs, it drives manufacturing, and it's been a good thing for the economy. We haven't seen it in the face of like what appears to be insurmountable debt at this point. So we've gone through that exercise when we've had the ability to take on debt and backstop it. How much longer can we do that? That's the question. So that's why I look at everything that's going on this time, and it's like, how is this going to play out? Because I don't think it's going to play out the same way it played out with the post-World War II economy, for example.
Yeah, and I think this has just been, that's why it's at 50% around, is people just, we don't know. It's every other week, I feel like we have one of these and things are looking great. And then we have a week and it's like, things are not looking so great. And then are they going to raise the interest rates? Or are they not? Or, I mean, the recession helps with inflation, but also the inflation has just gotten out of control. It seems to not be ending, but we have a strong, resilient job market, like you said, and it's too confusing.
Weird economy, and yeah, it's a toss-up. To your point, 48%, that's a flip of a coin.
Yeah.
I hope I'm wrong. I'll say that. I hope I'm wrong, and there's something that's gonna change.
So they always used to say that there is nothing more certain than death and taxes, and in this case now, the only thing that is certain is the adoption of artificial intelligence. And PwC has partnered with ChatGPT creator OpenAI, and this was reported by Accounting Today. And this is not surprising at all, but PwC is the first one to jump on saying, like, we actually are in a partnership with OpenAI, figuring out how we can incorporate this into our due diligence, compliance, identification, and even recommending business deals to clients. I'm very interested in seeing where the line will be drawn as far as how much advisory work we're going to rely on artificial intelligence to do. Because it's one thing to just do mundane compliance work, but this is the iteration of AI that I think has everybody buzzing, because there was always automation of processes. I had programs that could identify a word in a document and say, oh, what's the invoice number? And it can tell you what the invoice number is in a PDF that it thinks is an image. Okay, that's one thing. But this is almost like starting to think, and it's providing advice.
So, yeah, you're right. And this is where I get a little bit concerned, because like the tool that you mentioned, where you can search through maybe a set of documents or whatever, that's a true enhancer to your abilities. Like, you know what you're doing, and you know the purpose of the tool you're using, and you're going there. My concern is that AI starts to do the work and do the thinking, and then the big impact I see there is how do entry level people learn how to do the job if something's doing it for you, and then how do you just like imagine if you never did a bank account or a credit card as an auditor, and then all of a sudden 2 years goes by and you're supposed to review that information and go. It's really hard to do. So the whole learning on the job part really concerns me. That's going to be going away, presumably, if all of this is actually executed on the way they talk about it. And so when I look at like knowledge set and learning, that's a big concern to me. But overall, it is low level work. And if you can automate it, then great for the broader business, but not so good for trading.
Yeah, so I want to read a little bit here from this article. PricewaterhouseCoopers LLP has teamed up with ChatGPT owner OpenAI to offer clients advice generated by artificial intelligence as the big four firms look to cut costs and boost productivity. The new AI system is already behaving, this is interesting, like a 25-year tenure partner. That was what was said by the chief operating officer for tax and legal at PwC, UK. The compliance burden globally is increasing with geopolitics, and the level of complexity that the C-suite is facing is like you've never seen it before. A lot of people talk about how there's going to be job displacement, but in reality, to navigate these situations, AI is going to be necessary to actually do the work. The risk here is that with their margins under pressure from salary inflation, professional service firms focus on using AI-embedded tools as a means of reducing costs rather than developing better solutions. So it's almost like using it as an excuse. And I don't know what's going inside the leadership minds of the individuals at these firms, but it's like, well, we don't really know how we're going to adapt for the future from finding new revenue options, but we can cut costs on what we're already doing by outsourcing to other countries, or in this case, outsourcing to artificial intelligence.
Yep, that's exactly what's going on. And I fear the path this is going to go down.
So one of the things which is interesting, I got this from the Morning Brew since I've been on this Morning Brew kick, is there's a recent legal case that actually happened. It was with a high-profile rapper Pras, who lost a court case due to his closing argument being drafted by an AI. I'm not going to get into the details of the case, but the fact is they were bragging for a while about how they were using AI as a major resource for the legal team, and then they actually bragged about having AI generating some of what their speeches were going to be. And they had AI generate this closing speech, which in the speech in and of itself sort of ended up incriminating him. Like just the way in which it was crafted. It was like, I know that he did things that were wrong, but how wrong really were they? Meanwhile, the purpose of the case was, did he do it or did he not do it? Right.
So they didn't proofread it before submitting it? Like they just fully trusted AI to do it?
Allegedly not. I mean, or they did read it and they said, allegedly. Well, AI knows better. Maybe they thought, oh, AI knows better. I mean, it seems absurd. It seems crazy. Now, of course, the firm is getting sued for negligence for having botched this closing speech, which makes sense. But when it comes to professional services, like you said, how incentivized will people be to actually learn and remember stuff? Because Gen Z at this point, they're checking out. There's this apathy that's coming from this generation. They're either really into like how I can utilize AI, and everybody else that's like not about it. They're like, well, what's the point? What's the point of learning things when we're just going to have bots that can know how to do it for us? And that's a big macro concern of mine.
Yeah, you're closer to Gen Z than I am, but that is, oh my gosh, if that attitude's developing organically, then that's very.
Yeah.
Let's stop talking about AI for.
All right. Moving on to AI adjacent is cybersecurity, right? Because you can't talk about anything online without dealing with cybersecurity. Also from Accounting Today, companies are shifting disclosures in response to the SEC cybersecurity rules. The SEC's new cybersecurity disclosure rules are a forcing function for management teams and boards, as companies will now need to make more robust disclosures about their cyber risk management practices. The rules will undoubtedly compel many firms to adopt more robust processes worthy of the disclosure. We sort of alluded to this. I think over the summer we had an episode where we talked about additional disclosures. This has been the one progress that I've noticed over the course of this year, just from seeing different accounting headlines. Everything's moving towards more disclosure, more transparency. That's, I think, the best thing that's happened as far as the industry is concerned, and one of the better things for the economy, I would say.
Yeah, I love this for two reasons. It's more transparency, and it's not a ton more work for accountants. Head over to your SOC 2 Type 2 report, grab the language around this, modify it a little bit, and you should be able to put it into your SEC filings and be good to go. So it's not like a ton of additional work. Your company should already have a SOC 2 Type 2 report done, and you should be good to go on this disclosure.
Yeah, when you have to be transparent, you become more accountable, and it forces you to get your act together. So I think it's all good on all fronts, because if you don't have to share something, then maybe you don't look to, well, if we don't have to tell people about this, we don't really have to invest as much in this area. And so if bad things happen, since we don't have to talk about it, it's not really, there's no consequence to negligent actions. Now, if all of a sudden what you do is broadcasted to the whole world, you have somebody leaning over your shoulder as you're doing work, you're not going to be procrastinating. You're going to be showing, oh, look, I'm working the entire time. So just having that extra accountability from the public eye or from anybody else helps.
And all public companies should be operating this way anyway, so it's not like a big process change. That's why I say it's just snagging documentation from another audit report and moving it over here. One question, though, is this providing too much information to people who are trying to hack into your servers and the ones who would be violating all this? So I don't know exactly the detail to which you're disclosing it, but perhaps there's something where you're giving the enemy a little too much information.
Yeah, I mean, it is one of those things where you're showing your playbook. Hey, here's all the ways at which we're mitigating risk. And now if I'm really a sly, conniving, clever criminal, on the other side, I'm thinking of, okay, this is a new challenge. How do I get around these different ways that they're mitigating the risks?
Yep.
That's a criminal's challenge that hopefully nobody decides. So inevitably, some people will decide to take upon that challenge. I always wonder how the people who have that, what are their day jobs? Are they just full-time criminals? Where did they get their last loot from? Do they have enough to sustain until they make their next robbery? I always wonder, how do they have
what's the side hustle?
Yeah. Oh, the economics. That would be a cool sort of thing. The economics of running a crime ring. How do you kind of get started? You have seed funding to get you through the first 6 months of planning your heist, and you need the technology.
It all depends on founder mentality and what space you're in. Yeah.
There's something in every industry for everybody. So other things with attitudes here. This is from the Wall Street Journal, and this is sort of addressing that whole workplace and workforce mindset shift, which ties directly, I think, into the economy, because there's this weird balance now of companies having to address the fact that there's a talent shortage in so many areas. But on the other side, you have AI stepping in, that employees are concerned about having their jobs actually taken. And then you have people who are concerned about not having a job because they want to have steady income through tough economic times. Yet at the same time, they're the ones who hold the power to make the companies do what they say. So it's a really weird thing. So this the stat here is that 30% is the percentage of white collar workers with access to paid leave who have taken sick time this year, up from 21% in 2019. It's from data from payroll benefits provider Gusto. And it's particularly amongst the younger generations, which have shown an increased willingness to use sick days. And this obviously came out of the 2020 era, where there's a lot more priority saying, if you don't feel well, don't come to work. Got a little convoluted then when things were moved to remote. Here you are, technically, if you had to work from the office, you physically couldn't work from the office today. So you're working from home. But you can do that because you can work from home. But in a world where you couldn't work from home, then you either forced yourself to come in while you were sick, or you took off. So it's really interesting that there's been this shift in culture of attitudes towards days off.
I got to say, I'm surprised it's this low. Only 21% in 2019 used sick time when they have paid leave. I know at EY we had both sick time and paid leave, and I know I would max out that sick time off for sure, because that would not roll over to subsequent years, whereas the paid vacations accrued right over time. I don't know if you had a similar setup.
So
Yeah.
I think
Why is it only this number?
I'm thinking that some of this perhaps, and I don't know how many companies go into detail. I know it's definitely a compliance thing where you have to identify the type of leave that you're on. I'm wondering if there's just companies that have sort of unlimited PTO, so people are just grouping it all in. I'm just taking like a half day off here. I'm not feeling so well. I'm going to work. Or I think also some of it is working from home. So you're not really having the sick day. You're just not coming into the office that day. You can work from home. How often do you need to take sick days when you have the ability to just work from home? But
is this really tied to like mental health and a broader acceptance of needing a day off for mental health being considered a sick day, and that's what's driving it? I just see the end of that sentence with a broader definition of what they cover. That seems to be like, okay.
Yes, it's my kid's sick, so it's sort of a thing that you almost through the I forget what I always think about it in chemistry. It's the transitory effect or whatever it is when it passes through.
This says the younger generation, not parents necessarily. So that's why I kind of turned to like, seems like with the younger generation, the mental health is more viewed as like and the same par as physical health. And so if I'm sick, if I'm having a rough day, I'm going to book that as a sick day.
Sure. Yeah, no, I think 100%. It's definitely, when it comes to the Gen Z, those who don't have the kids, then it's definitely the mental health thing. I think when it comes to the millennials, it's definitely I have to do parenting stuff sort of situation. My kid's sick. I got to take care of them. So it becomes a sick day. So it's one of those things that's interesting. Like, how do businesses ride the line between addressing the demands of the workforce to retain talent, but also not being totally taken advantage of?
Yeah, that's it's a great question. Every company is different on how they approach that. That's definitely just like a company culture by culture thing. I'd like to think we at FloQast are pretty accommodating around mental health, and we have days carved out for it. But yeah, at the same time, you want to toe the line and not have someone taking advantage and taking like 50 days off a year or whatever. But I also hate tracking vacation and like, it's a trade-off. So at the end of the day, it's like, I don't know, industry standard is like 3 weeks off. Let's try to stick around there and not be unreasonable and keep it chill. And I don't want to have people abusing it such that we have to like put in a formal policy and act that way. So everyone for FloQast, let's just keep it reasonable. That's it.
Well, I mean, this circles us back to, like you said at the very beginning, it's hiring the right people, right? And I think at the end of the day, if you hire people that are dedicated to the cause, dedicated to the mission, they're trying to do their best job. They don't want to abuse the system because you're hiring people for the attitude that they have towards work, and I think that's a major element when it comes to that.
Could not agree more.
So just before we get into the Have You Read It section, do you think though that where's the power lie right now between in the broader macro market, right? Is it with the employees saying we demand higher pay, we demand this, we demand that, give it to us, or is it with businesses saying of like, look, if you want to have a job and be able to work, then you just kind of got to deal with what we're doing? Because there is this, I see an article that says companies requiring employees to return to office, and then right underneath that is talent shortage has the power with the employees. And so I'm like, which is it?
I think it all depends on the role. And this is where, when you look at accounting, and we're going to talk about the talent shortage, I think some more, and we've talked about it a lot on the show, there's a clear supply and demand issue. And so accountants have the power in that one, and they can find another job. They can demand higher salaries. And I encourage all of them to do so, to stay in that job. They should absolutely do that. Try to control your own destiny, maybe ask for a raise. But then other fields, within FloQast, it's just not like that. We're not hiring nearly as much on the sales side as we did in the past. And so there's just not as many job openings here. So, someone like a sales role, when there's not as much revenue being booked by software companies, there aren't as many AEs necessary, that's going to be a worse job to be going after. But like accounting, software engineering is still very good. Easy time to get a job as a software engineer. And then I think you also need to look at like the type of job, right? Blue collar versus white collar. And I think there's a lot less blue collar talent available. And as we're seeing with a lot of the strikes, like the auto workers going on strike, we're seeing that there are really good deals being struck by labor unions to support those. So yeah, it's so sector and like job specific that it's really hard to generalize the whole economy right now.
Yeah, 100%.
That seems to be a theme.
Yeah, the theme is it's very gray. Suddenly, accounting becomes not so black and white; it becomes rather gray.
Yeah, we're a country that likes to turn narratives into black and white, easy to understand things, but this is all incredibly nuanced, and you got to think about it a little more thoroughly.
And I don't care what the prior generations say, and I know they'll rip on me for this, but it feels like this time is different than all the other times. And I know I always hear every just well, when I was a kid, we thought this was, you know, you talk about the doomsday thing. They're like, we were all thinking that too. I was like, I think this time is a little bit different.
I hope we're wrong.
Yeah, I hope we're wrong too. So have you read it? And this is sort of getting into the discussion, of course, about the talent shortage. And I think this is a systemic example of it. So we have Dusty Baguette here. Love the name, from the accounting subreddit. I went to my first Meet the Firms night, and it was awkward. You want to take a read here at what the discussion went on there?
Yeah, all right. I never did one of these, so I'm curious to read a little more about it. There were a couple booths that were really friendly and informative. I got to hang out. I got to hand out a couple of resumes, but most of them were weird. I don't know why. I would introduce myself to everyone at the table. They would give a little introduction, and I would ask a follow-up question, but their interactions were just awkward. There was only one. There was one with 4 people. I shook everyone's hand, and half of them would not look at me in the face. One of them kept giggling. Another one had a CPA and a tax preparer. The CPA wouldn't look at me, and the tax preparer looked like she swallowed a spider. What does that mean?
I guess it's kind of like holding your chin close. And
that's weird.
Yeah. So
all right.
Anyway,
the end of this is I work with 2 CPAs, and one of them is super talkative and personal. The other one is more shy and admittedly a little intimidating, but I was expecting to network, I guess.
Yeah. This is where we need to start addressing the pipeline issue, right? If this is somebody's impression of who they're meeting at the accounting firm, I mean, 101 marketing, and I think sometimes firms get it and they do it properly. Maybe comms and PR might flag this, but there's always, I feel like, a reason why recruiters seem to be the more attractive individuals, and they reach out to you, and you're able to use that as a segue into having a more personable experience because it's someone that you're excited and want to speak to. I would think that you'd want to put perhaps your more personable accountants, the people that work at your firm, whether you're in private industry or whether you're in public, it doesn't really matter. If you're trying to recruit individuals to become accountants and come work with you, everything is all about your team. The reason why most people stayed in public accounting as long as they did is because they felt camaraderie with their teammates. They wanted to be close to the team, and they had this shared bond of working together. And the reason it took them so long to leave, even if they didn't like the job, was because they liked the people who they worked with. And that's what you're hiring into. And when you present people who are furthering the stereotype, which is the thing that we're trying to eliminate, that doesn't help inspire people to go into accounting. I think the rest of this article, actually, that this individual had said, because there was more to this paragraph, was just sort of talking about how he's like, I don't know, maybe should I change my major to finance, or should I pick a different one?
No.
And that's the type of thing where it's just, we need to have better first impressions, people's first interactions with what is an accountant needs to change, I think.
Yeah. This surprises me. I wonder if if the firm sent out people who really didn't want to be there. They're not recruiters. They had to take time off of one of their engagements and go show up to this thing, and so not super engaged in it. Because I know at FloQast, we've sponsored a few of these Meet the Firms, and I look at the team and we see the pictures get shared and everything, and the people who go there I know want to be there, are part of the FloQast mission, and want to recruit people into FloQast. I highly doubt they're there doing the things that are in this Reddit post here. So sure. That is concerning to me as well.
Yeah, and
the Reddit section.
And here's one of the things that I think we don't think about is we see how we're trying to do it, right? And that could be at FloQast, or that could be at other firms that I've been at, or just even in major cities where you are a little more forward thinking. You're seeing the pipeline issue and you're saying we have to address this. But I'm wondering if there is a large portion of the country where it is still very much so being perpetuated as far as the stereotypes go through these sorts of encounters and these sorts of meetings. And so even though we might host something that is successful and that it is putting people's best foot forward, and I was the person at Grant Thornton when I worked there, they always had me taking out the new potential interns to lunch and do the Q&A with them, and then walk them through the whole course of the day, because I was just personable, and they're like, oh, this guy's creative, he's fun, this will make people super inspired to want to come into accounting, but particularly come work for our firm. And I think that's just a lot of that has to do with who's the leaders of the places that we've worked at and where we've naturally and organically fostered and created these environments. I'm always just curious. Could be major portions of the country, like I've never been to Oklahoma. It may be somewhere in Oklahoma, like this is just the norm, and that's where a lot of these posts are stemming from. So we get confused and we're like, is that really how they're doing it? But I'm thinking that it's still a larger systemic issue that kind of can go across the board for all.
Yeah, this just fills the stereotype, and I would say the firms just sent the wrong people out there. I'm sure they have some people at their firm that would do a better job at this, but if you want to recruit people to your firm, you got to send people who are excited to work at your firm to convince people to come work at your firm. And this is, I would recommend they switch their recruiting approach on this one.
Absolutely. So that is certainly a concerning thing, but we can use that to get into our concerning section. And this is a direct sort of segue in here from that. Again, I've been on this morning brew kick. And so this is not necessarily a meme, but it's the calculator. College students don't want to be accountants anymore. And that's the segue that I was going in from this Reddit section of this individual who maybe didn't want to major in it anymore because he had this awkward encounter. But according to the Institute of Certified Public Accountants, the number of U.S. students graduating with either a bachelor's or master's degree in accounting dropped 7.4% during the 21 to 22 academic year from the year before, the largest one-year decline since at least 1994 to 1995. And this was then picked up by Accounting Today as well. This has been all over every single news. I mean, Wall Street Journal was reporting on it. It was a headline topic of the Morning Brew. They're not an accounting focused show, but they were talking about that. That was half of the segment. It was actually titled that, and this was the last week. And Accounting Today's picking it up. I had people sharing this with everybody, sharing articles about this with me, and they're like, "Oh, you should talk about this on the FinTech Flo." And I was like, "It's unavoidable."
We've been talking about this so much. I wonder how much we are responsible for getting this out into the media ecosystem. There, I know we put quite a few articles about this problem, but it's because it's very real and needs to be highlighted. I do wonder if do you think this narrative getting so broadly shared encourages or discourages people from majoring in accounting?
That's one of the really interesting questions, because I think that if you're a forward-minded person and you see the opportunity in that there's not a lot of people going into this, I'm thinking I'm going to go into that because that means there's less competition for me. I can really claim my stake in that area. There's a reason why I didn't try to become just the generic rapper and it was the rapping CPA, because there was a lot less competition in the CPA world for rappers, right?
Yep.
And it's the same sort of thing. Is I think there's going to be people who are going to be completely turned off by the fact that, like, well, no one's going into it. Well, I'm not going to go into it. Those are the late adopters. I'm not going into something that everybody is going into. But I think this actually will help the profession by seeing this, because the ambitious, more entrepreneurial minded, more creative, more innovative individuals, those are the ones willing to take the risk at a new industry. They're the ones willing to try to get onto ChatGPT right away. All of my friends back east who are in the finance and accounting sector, they're still not even up to date on ChatGPT. And I even was a little slow. I mean, I was talking to people within the company here at FloQast, and they're like, "Oh yeah, I have it open all day, every day." And I was like, "Really?" And that was like 6 months ago. And then I got on board and I was like, "Oh, actually, this is super useful." And then I shared it with my friend 6 months later, and now he's like, "Oh my gosh, this is going to be a game changer." I'm like, "We've been talking about this for a year, and you're just realizing that it's going to be a game changer." So I think those are the traditional accounts who are those late adopters, who are more conservative. They would probably, the people who had the personality type that are currently in accounting, who maybe would have gone into accounting, I think no longer are not going to be as incentivized because they're scared to go into it because nobody else is. It's a little bit more of that group think. But the people who are the ambitious, more innovative, and more forward-thinking people see the opportunity in this. And I think it then enhances the profession, because now those people who become accountants become so, and they have a different personality type and character type than the ones that we've traditionally had. So it hopefully then shifts the stereotype, because these new people are literally not like that traditional stereotype.
And then they're going to use tech and be more innovative. And that's an interesting pitch. I mean, the notion of like zigging when everyone's zagging, it can be very profitable. And so that's, if there's less talent available and you're good at doing more work, and hopefully you can make more money in the accounting field than you've ever been able to in the past. But that does take the ability to like process everything that you just said and apply that. And is the average 18-year-old able to do that is the question.
The one dangerous part is that a lot of these articles talk about how like the pay is low, the hours are long, the work is boring. And when you see that, that's the type of thing that like you sounding the alarm and then saying why the alarm is being sounded, and people are being like, well, heck no, I'm not getting into that. Then everybody's leaving it. Everyone's leaving it for a reason. I'm out. And if you can't put those dots together to see an opportunity to enhance it, then you're like, all right, well, I'm not joining.
And it doesn't provide the vision where if more people leave the profession and there's still the same amount of roles required, which I think roles are going to go down minimally, then the only thing to give is they got to pay more to recruit accountants into the job. And so the magic hand of the market will bring salaries up so we can recruit people. So if you're able to kind of see the forest through the trees there, that whole saying, it's that at some point here, accountant salaries are going to go up in line with the lack of supply of talent in the field.
Sure. And the other thing too, which I think is important to be disclaimed, I love a good disclosure, is overall enrollment in earned degrees has gone down. And this again has to do with, you talk about the opportunity to get into blue collar jobs. If I see everybody, and there's nobody working as electricians, and I know people need electricity, maybe it's a good idea to go into the electrical field.
For real, that's an excellent disclaimer. That's a key piece of information there. Glad you brought that up.
And that's the type of thing which I think we undervalue with being an accountant, is you start to think about the note behind the note, or the what's the fact behind this stat that we see. Because we see accounting enrollment has gone down, but then you have to look at the bigger picture. It's not just looking at accounting has gone down; it's overall enrollment in colleges has gone down. People
do you know that overall enrollment rate decrease?
I do not know the overall enrollment decrease. I just know that was a disclaimer on there. Okay. The other thing too, which is optimistic, is that around 78% of master's program respondents, as far as administrators and bachelor degrees at different colleges goes, 78% have reported that there will be the same or higher enrollment in their programs next year, versus only 58% had said that during this past year. So
that's awesome.
Is it's looking up.
Okay, that's really good. Yeah. That's really good to hear.
So again, a part of that is probably due to the COVID trail off, right? It's the 2020 trail off, where there was the drop in enrollment. People didn't go to college; they put it off. They went traveling. So there was an overall systemic decline, and I think we start to see it kind of pick back up. So this is going to be one of those things that we track throughout all of next year, I would say, too, and see. Now you have 2 years worth of data to kind of go from, and what is the future outlook really going to be like?
Yeah.
So confusingly good or bad news related to the same. This is from Going Concern. Who had do more fraud on their things that could save the accounting profession bingo card? This is research from the externalities of financial statement fraud on the incoming accounting labor force. That is a mouthful of a article from the Journal of Accounting Research. And I'll summarize it for everybody, because I know that sounds confusing, especially if you're just hearing it. And I'm the type of person that would need to read that as it's being said to really grasp what the heck did I just say. Research to date suggests that financial fraud can have damaging consequences, like increased criminal activity, as well as reduced trust and participation in capital markets. However, insights from these studies imply that fraud would create a negative stigma around the labor market for all business fields, and accounting in particular, but we find the opposite. Incoming students are actually more likely to major in accounting when local frauds occur during their formative years. Specifically, the researchers find a 4% increase in the likelihood of majoring in accounting when local financial frauds are covered by the news media during the students' formative high school years.
That's a really cool story. It actually makes a lot of sense to me.
I think, who actually had this exact thing happen to them was, I think, Kelly Pope. And I believe when I was interviewing her, she talked about how early on she had experienced fraud. I think it was her father had, I can't remember, I don't want to botch the details, but I know that was one of the reasons her exposure to fraud when she was young was one of the reasons she decided to become a forensic accountant when she got older.
That's cool. Yeah, personal story. I remember. Did you watch any of the GameStop documentaries that came out?
I would like to watch Dumb Money.
Okay.
I have not seen. No, I haven't.
I forget. Yeah, I watched one of them. I forget, but one of the themes with a lot of the Redditors is that they were very burned by what they viewed as systemic fraud that occurred in the '08 housing crash, and this was a bit of a, like, the investing in GameStop and doing all this was a bit of a get back at you banks type thing. Like, they kind of put Citadel, that they're crashing in that, like, world of the big bang screwed over our families and we lost our houses and everything. So there was that, like, visceral reaction to, we were defrauded out of our homes, and that carried forward. And if you think about it, like, the Reddit investing in GameStop, I know a lot of people was just following what everyone else was doing, but there was a core set of people who really did investigate the financials and dig in deep and all this stuff. And, like, right in the middle of it, people were digging deep into, like, how all this stuff works and how stocks get sold. Are there phantom options being in there? And it was like, much of that was driven by the spite that came about from the fraud in '07 and '08 with the housing market crash. So I don't know, just another proof point around that, something I saw develop in real time during the GameStop saga.
Yeah, I mean, and that's what I was talking about early on, with how many households are now getting into investing and getting into the stock market. And a lot of it is inspired when these sort of traumatic, if you will, events get people to suddenly become very interested in whatever it is that's being talked about. Accounting had this big spike with PPP loans and all of the COVID relief. That was a huge, like, high for accounting. Everybody was talking about was how we need accountants to help us figure this out. And then, of course, you had this weird comeback where now all of a sudden everybody's, like, fleeing the profession, like it's like maybe they're burnt out from that experience, right? But regardless, when you have these big events that highlight a profession or highlight an industry or highlight even just an activity, obviously we don't want fraud to happen, but it is a cool byproduct that when individuals experience it, they're more into doing it. I mean, you see that in the medical profession too. Oh, my brother, when he got into physician assistant school, he was like, he was in with Crohn's, and he had broken his leg at one point, his shoulder, his elbow, his wrist. And so he's like, I had so much experience with being in the medical profession that it inspired me to want to go into that profession.
Okay.
And I had a really great PA, and she was so pleasant to me that I was like, I want to go be what she was. And
nice.
Again, in that case, it's a positive experience, right? Because it's saving you. And I think Peter Linto actually had said this. The reason he went into accounting is he met with his uncle, and his uncle had, like, a boat and a nice car and a nice house. And he's like, what do you do? And he's like, I'm a CPA. And he's like, well, that's what I want to be then. And so that's the sort of, that might seem a little cheesy, but it's inspiring people by having these examples that exist in the marketplace that says, oh, that's really cool, I want to go do that.
Yes, something has to happen during your formative years to pique your interest in any given field. And my sister's a PA as well. It's awesome. Yeah. First of all, an awesome job, and second, it's awesome having one of the family, right?
Yeah. Oh yeah.
Navigate that medical field.
Every time something happens in the family, everybody's like, ask Tyler.
Yeah, it's like, Kelly, check my x-rays. Is this doctor right or wrong? Like, I always have her auditing the professional medical opinions that I'm getting from other doctors, and it's disturbing how frequently she finds mistakes that it's, like, really wild. So if you can get a PA in your family, highly recommend it.
I have a friend who is his own tax firm, and he went to law school. And when he worked at KPMG in the tax law section, some of them were just lawyers, and he worked with the legal division. And he was finding mistakes all the time. And he's like, these are people that went to, like, 3 extra years of law school. And I think there's a little bit of beef that happens sometimes between CPAs and lawyers, because a lot of them seem to be not as detail oriented as you think they would be. And that's, like, a very proud sticking point of accountants.
Have you seen that episode of Parks and Rec?
No.
Oh, man. Okay. So Ben Wyatt, the CPA, they have an episode where there's a lawyer, and Ben's kind of like, we're both credentialed professionals. Like, we're on the same wavelength. Like, and he, like, starts dropping puns and very accounting, like, stereotypical jokes. And the lawyer's basically just like, shut up. We're here to get some business done, and, like, is not connected to the CPA at all, and thinks is better than the CPA, all that kind of thing. So I think any lawyers listening to it will take some umbrage with what you just said around them not being paying attention to detail.
Well, you want to talk about personal experiences? Is when I got my last year, it was 2000 and last year, I got my K1 from this real estate investment that I was in. this partnership. And I looked at it and I said, these numbers don't check out. And when I responded, everybody was like, oh, no, this is totally normal. I do hundreds of these. And I'm like, something is not checking out here. And I probed, and the lawyer was like, no, there's nothing wrong with this stuff, because he was the one that had prepared these K1s. And I called him out, and he was wrong. We had to file an extension. I saved everybody. I mean, I saved tens of thousands of dollars on my own in taxes just because of finding this. And I was one of the smaller investors in this thing. So some of these people probably had $100,000 to $150,000 of savings that they didn't realize that they would have gotten if nobody had said anything.
Was it a genuine mistake? That's a material.
It was
mistake.
It was a bookkeeping mistake. Yeah.
Okay. Okay.
And
did everyone else? Did all the other investors like buy you dinner or some nice gift for saving them that amount of money?
Yeah. I got a nice bottle of like special bourbon or scotch, something like that.
Okay. I hope it was.
I said thank you. Yeah.
Hope it was real nice.
Yeah. So they appreciated that, and I got asked to come back for the next investment that they were making, because we sold out. This was at the final sellout period. So.
Oh, okay, got it. They're like, yeah, we'd like to invite you back, and we'd like you to audit our K1s.
Yeah,
forward as well.
So and that's like that was like the coolest feeling, and I was like so proud of being an accountant. And I was like, yeah, you can't pull one over on me. And I was like, I had my network of people, and I'm like, I'm not a tax person, but this still seems fishy. And I ran it by them, and like, yeah, that's totally not right. And I was like,
it is a good feeling. Can I tell a quick auditor?
Yeah.
Like, we're building out the new office, and the budget was like $1 million for building out the office, and then they started trying to hit me with overage bills, and they send us some big thing where they were like, yeah, all the wood for the office is going to cost $300,000. I was like, excuse me, like, I know how much 2x4s cost. I'd love to understand how you pile up that price. Like, send me the support for that. And the guy's like, what do you mean the support? Like, that's what it costs. I'm like, no, like, number of 2x4s times price of 2x4, number of pieces of plywood we want, multiply by the price of a 4x8 piece of plywood, just like add it up. What's so hard about that? There was none of that. When they had to go do that exercise, as you would imagine, the amount came in well below that number that was thrown at us. I called up the landlords and said, hey guys, you're getting fleeced by this general contractor you've been working with forever. They dug in. He ended up getting fired as a result of that. So man, I saved us money. I saved those guys money. Got rid of a shady contractor. Like, it feels good when you catch someone just doing sketchy stuff.
People don't think that you will audit them. They think you will blindly trust what they say. And you might be a pain in the you-know-what if you're the one who's always bringing up these things, but you will be thanked, and you will be rewarded for that. So embrace your inner auditor.
And the pro tip is, when someone gets pissed at you for asking questions, you're onto something. Keep asking those questions. Don't let them win. Don't back down. That's exactly what happened. As soon as I started digging in, it was this like obnoxious contractor tried yelling at me on the phone and just kept pushing back. And then sure enough, he was the one doing shady stuff.
When they get defensive, that's how you know.
Yep.
Oh, man. Feels good to have that audit skill set. So this is from the Wall Street Journal, the return to office workaround, staying just long enough to be seen. And again, this is all part of this larger conversation of what's being taken advantage of, what's required. And this is an interesting concept, because I think a lot of people, even before remote work was a thing, before there was even any discussion about needing to return to office, because being in office was the norm, sometimes people would just be there for the sake of showing face, and they weren't actually doing anything. And I know this was very common when it came to public accounting, of you stay until the partner leaves. Even if you finished your work, you stay until whoever's above you, you stay until they leave. And obviously part of that was like, is partially toxic, right? And I wonder just how much of this lingering mindset of, oh, I just want people to know that I'm there, even though I'm not actually being as productive here. And so this is an interesting concept, staying long enough just to be seen.
It doesn't seem like, it was like this before COVID. This stuff happened in audit. This isn't too shocking.
Yeah. The article did say that many companies' policies require employees to work a certain number of days in person without specifying the hours. So some workers are following the letter of the mandate, but not the spirit, coming in long enough to be seen by their bosses before bolting. So the efforts may satisfy the attendance requirements, but could make it harder to achieve loftier career goals. Again, we've talked about this multiple times. I would rather spend all day, every day at the office, and you're interacting with your coworkers, you're forming better bonds. You're not getting the benefit out of coming to the office if you're just coming to be like seen and to go. It might help a little bit from the illusion. And again, so much of what is in work is just politics and the illusion of presenting to the right people at the right time, being seen and recognized for the right thing. Good leaders know how to kind of sniff that out and see who's actually putting in the work and who's just sort of showing face. But I think the return to office debate will be the primary labor discussion of FY24. So I'm going to call that now. And I think a lot of what we see next year will be focused around that.
Yeah. I mean, I think in 10 years, a lot of people are going to be in the office.
Mm-hmm.
Big macro prediction there, but that's my general take on return to office.
Yeah. And I think there is that natural equilibrium and natural balancing where I think, I'll use dating apps as an example of where you have everybody who has migrated to this digital world where now suddenly you're craving the counterculture, which is to actually go meet people in person. And when you get so remote,
meeting someone at a bar,
yeah, crazy,
yeah,
that's
wow.
crazy. Meeting out in person. So I think same sort of thing even with AI is everything becomes generated by artificial intelligence. There's a beauty in the thing that's made by humans, and that's my big slogan, my big mantra that I've been carrying. I just posted recently on LinkedIn about it. It's like made by humans. That's the future.
Yeah, totally.
It's the new made in America. And I haven't figured out how exactly I'm going to officially entitize that concept, but that's what I'm holding.
No, that's an interesting, a much lower form of tech. So I'm into woodworking. I do all it, it's me in my garage with my tools, my power tools, admittedly, doing my thing. But, you make mistakes when you're doing this stuff manually. Like maybe the end of a piece of wood blows out and so it doesn't look perfect. And there's you have to fill it with wood glue and epoxy to like cover up all this kind of stuff. So it's never nearly as perfect as like what you'd buy at IKEA or at Target, because that stuff's run through machines, it laser cuts it, it does it perfectly, it assembles it and everything. And so when you think about that, it's like, why would you ever want to buy something that I make when you can buy something that's perfect from IKEA or Target or whatever? But there are a lot of people who love collecting and having handmade pieces around their house. And there are a lot of people who buy things for the imperfection because that's how they know it was made by a human, which is kind of a cool, a cool thought.
Yeah. And I think about even when it comes to like marketing outreach, right? Where there's a point now where you have all this automated inbound messages coming in, like recruiters hitting you up or potential business partners hitting you up, people soliciting you through inboxes. I'm imagining a world where AI just talks to itself, because like I have an auto respond inbox that responds to any emails that I get. It's automatically responding with something, and then you have this back and forth. It's in the loop where it's just AI talking to itself, which I think is kind of like a funny concept. Right? It's just having a conversation with itself. But then there's an opportunity to just individualize, and it might not be as efficient. Right? You create all these things to be more efficient, but if effectiveness doesn't also increase with efficiency, then there's really no point. It's great that you could do 100 miles an hour, but if it doesn't actually get you anywhere, then that's useless. If you have a frictionless surface and you just are sprinting at 100 miles an hour but not actually moving anywhere, versus going slow and steady and actually making progress. And I think even if it means I have to take 2 hours out of my day to personalize each of these messages to that individual so they know this is written by a human, or I'm actually calling them and they know they're speaking to a real person, suddenly it'll be like, wow, that's super refreshing.
There's in that world, business development reps, I get these messages and emails all the time. The ones I do respond to, or at least take a look at for any BDRs listening to this, it's like, how personalized is it? And then have they listened? Like, there's some BDRs who have like listened to podcasts I've been on and brought up some point I made in a podcast and put that in an email and loop that around their business and what they do and try to deliver value. And that's just like very well done, makes a lot of sense. And then I, as the receiver of that, I'm like, wow, that was not automated. That was like someone put a lot of time, and I feel like I kind of owe it to them to let them do their pitch a little bit. So yeah, that's like back to zigging when everyone else is zagging. Like the whole idea of doing it at scale isn't always the best thing when everyone's doing it at scale, and all it takes is you to spend 20 minutes, write something together, write something custom. And if you book one demo that day by a custom thing, you might be better than the rest of the team who sent out 1,000 emails that were just, blasted and not opened and marked as spam and all that good stuff.
Quality over quantity. We hopefully move back for that. Now, TikTok has made it all about quantity and nothing about quality, but I think, again, you have the counterculture that gets in there. So kind of speaking about TikTok, we can kind of get into the memes here. And thought this comment was interesting here too. But this is so for those who are not able to visualize this with us, we've got the client, which is an individual, perhaps the teacher, shaking hands with the partner, who is presumably this daughter's father, and the girl reaching out her hand to shake somebody's hand. She's a kindergartner. She just graduated. Me, who did all the work. And so it's funny because there is this certain sentiment of here I am at the bottom. I did all of the actual work. And then the partner is like, yeah, we crushed this audit. Great job, team. Meanwhile, they just came in at the very end, signed off, and then took the picture with the client. They're like, oh, thank you so much for all the hard work you're doing.
You gonna read the comment on the bottom?
You want to read the comment?
I think it's pretty solid. It says, "You're welcome to start your own company and bring your own clients anytime." That's the counter argument. That person doesn't do that person doesn't do any of that work if the partner wasn't there to bring in the client in the first place. So
yeah,
and I get it. I get both arguments.
This is one of the things that I thought was interesting is just like as I've moved along in my career, because I think when you first start off and you're a young buck, and it's so funny how you evolve through life, and as you mature, all of the things that you said weren't going to be true suddenly become true, and the way you think about things. And it's the old, when you're a parent, you'll understand when you're a parent one day, and you're like, no, it's going to be different. And then you get there and you're like, there it is. And it's like, I've already had this conversation and now I'm preaching the thing that I already was aware of. So there's definitely an animosity from the bottom, but as I move through my career, I feel like I do have a greater sense of respect for the people at the top who do those things. Because as you edge closer to that, you're like, okay, I'm getting more insight into actually what's involved. And so I think it kind of begs the question, like, how do you balance this mutual respect up and down the ranks where the bottom is felt appreciated for doing the actual grinding, but the top is also respected for what it took to get there?
I feel like I'm kind of uniquely positioned to be able to do that because I didn't gradually move up the ranks, right? And so I feel like if you gradually move up the ranks, you might forget what it was like to be a staff one at some point. But I went from senior accountant doing work to CEO. Like I skipped all that stuff in the middle and gave myself the CEO title. And so that actually the most connection I have to like a salaried job where I was working for someone else is from an individual contributor perspective. And so I can always think back to like, things like, why don't executives listen to us? Like we're the ones who actually know what's happening around the company and we know how to make it better. That's something that I still really believe in. And that's why I go to all levels of the company to get feedback on what's going on, because reality is, an accounting success manager who's talking to our clients knows more about that client than any other executive I could talk to and give feedback on. And so I very much respect what's going on at that level. I'm also aware of these feelings. I had these feelings as well when I was doing this. But as I've moved up, like I feel like the old man who's like, nah, I kind of get the partner and the CEO perspective at this point, but it's only because I lived it. But I'm also like not disconnected from the days of doing all of that work. And so I feel like I am in a bit of a unique position to be able to do it. And one of the things that I really believe in, and I'm sure you've seen this at FloQast, is transparency. Mm-hmm. And I think that is something where if you move up through the ranks gradually, that starts to fade away and you forget about that communication not going all the way down. But when I was working, that was what was most inspirational for me, was when our CEO was really transparent and telling us about what was going on, even at my lowish level at the company. So I try to carry that forward and be really transparent and hope that that's a way of like rallying everybody and recognizing that it's important that everyone knows what we're doing and why we're doing it.
Yeah, it's cool for you to be able to have that experience and say, I really like how this was done. I'm going to now apply that to the way I operate. And I think that's the goal of refining and improving as we go through our careers and go through life, of taking the best elements of that which we've experienced and incorporating that into our own being, our own way of operating.
Totally. And not doing the stuff you didn't like. That's you can learn so much from the mistakes, maybe more than the successes.
Absolutely. So the last thing we've got on here is the hope of inspiration, which is the trend of making accountants cool. So I don't know, have you seen this? It's from Good Work MB, and it was in paid partnership with Xero. So Xero, which is mostly bookkeeping company, and they're here trying to, do this content thing to try to make accountants cool. And I think this is kind of cool because we've been doing this now for a couple of years of trying to work on different types of content, get into the market, showcase and elevate accounting. And it seems that there might be some momentum starting to kind of fester as this pipeline issue grows and becomes more apparent. So you've not seen this, I'm assuming? So
no, yeah, this is really cool. It's like, I like that more companies are, I think, recognizing this as a problem, and it's collectively something that we all can help solve.
Oh, I'm the new head of accounting, and I'm a cool guy.
It's my first day, and look, I get it. Most people don't expect their new head of accounting to be so sick and awesome, but that's all right. I'm not too worried about it.
Who was that guy? Have you seen the new guy?
The cool one? Yeah, he's the new accountant.
What? What do my weekends look like? There's a water park that I skydive into for charity, but besides that and my meet and greet with fans, it's kind of low-key.
I heard he can do a kickflip with his mind.
I heard there's a country who thinks he's God.
I heard he won the finals.
What finals?
All the finals.
He's optimizing the shit out of our cash flow.
Our clients are paying us twice as fast now.
Oh, come on, he's not that cool.
Hey, what are you talking about?
I'm sorry. Hi, I'm Brian.
I know who you are, brother. It's okay. We're on the same team here. You can let go of that negative energy, all right? It's okay.
No, it's okay.
Oh, you're so cool.
Yeah. So that is a cool little bit there about elevating accounting and making the accountant the cool guy. I love that he's optimizing the shit out of our cash flow.
That's a really good line. So that was done in partnership with Xero?
Yeah.
Yeah, Xero's always been really good at marketing. I'm glad they're starting to shift more in this, like, trying to change the perception of accountant direction.
And
that's really encouraging.
Yeah, they got Dan Toomey in there, who's he's the content creator for Morning Brew. So his job is just full-time every morning coming up with another video sketch, basically, to do that.
Did Morning Brew pay you for this episode?
No, they didn't.
You mentioned Morning Brew on this one? No, how much you getting? Come on.
I'm hoping that if I say it enough that they'll cross-promote us.
Oh, okay. I like that. Yeah,
right? It's a play.
Yeah, FinTech Flo covers, something.
Yeah. The most improbable scenario, every negative energy. What do accountants actually do? Some of the comments on here are kind of funny, but yeah. So I think it's a cool thing to be finally progressing on. And
hey, while we're saying that, shout out to our accounting team. We just wrapped up a record low cash burn quarter, much of it on the back of their ability to collect cash faster than ever. So
wow,
spot on. They optimized the shit out of our cash flow. Our accounting team literally did this last quarter, record-setting burn for us. It's awesome.
Great. Yeah, I mean, that's just one of the things which, you don't realize that that's something that accountants can make a material impact on a business doing. And there's a prime example of how it happened within our own company.
Love it. I sleep a lot better at night with that quarter.
We love it. And that about does it. That kind of wraps us up here with the concluding cycle. So hopefully we can keep using this. Hopefully we start seeing more of this sort of cool accounting content popping up. I'm looking forward to some of the stuff that we've got in store here at FloQast Studios to get that sort of rolling and keep up the momentum there. And it's not all black and white when it comes to accounting. Message is it's gray, and that applies to everything across the economy.
Yep, totally agree. And if Xero wants to partner on some stuff, that might be a cool opportunity.
Absolutely, yeah, hit us up. So that about does us for episode 18 of the FinTech Flo, and thanks everybody for watching. Thanks for checking out the FinTech Flo. As a reminder, this episode is available for CPE credit, and you can get that at FloCademy or on the Earmark app. Details are in the description below.